Okay, so welcome back everyone. We're going to continue now with Learning Unit 6 up to Learning Unit 9. So Learning Unit 6 is our inventory systems. This does not change the way you do the accounting of it. So all the principles we've learned so far in Learning Unit 4 and Learning Unit 5 still remains the same. The only thing that changes in Learning Unit 6 is how do you account for the inventory in the inventory system itself. So is the inventory accounted for as an asset or is it accounted for as an expense? Okay, so the first thing is remember the inventory definition. They actually asked this in the test, and most of you only told me that assets are held for sales. Now the other inventory definitions as well is it can also be processed and sold, your inventory, or it can be used in the production of another asset. Okay, so make sure that you at least go revise the inventory definition in case they decide to ask it again, because that was very poorly answered in the test. Okay, so this was in Learning Unit 2. This is where the definition could be found. Okay, when we talk about inventory, when you record it initially, you record it at the cost. So what you physically spent on that item. So the cost is any cost that you have incurred to bring that asset to its current location and the condition in order to sell it. So that means until it hits your warehouse where you store it for sale, you can include insurance, you can include any carriage or any railway or any transport fees that you might have, any storage fees. So all of those costs would be included. Now, when we talk about the different inventory methods, for your perpetual inventory system, we would add all of it together as part of your assets cost. Whereas if it is the periodic inventory system, you would have to show each and every expense separately in the general ledger. Okay, so that's the difference between the two. Then when we talk about eventual or subsequent reporting, that is now when we get to year end. We will account for inventory at the lower of the cost and the net realizable value. Net realizable value is your market value, so the amount that you will be able to sell that product for, less any selling cost to get rid of it. Okay, we have discussed the perpetual and the periodic inventory system previously, but let's quickly just recap it again. So under the perpetual inventory system, when I purchase the inventory, I will debit the asset account and I will credit the owner's equity account. Or the owner's equity account would be unaffected. Whereas if it's a periodic inventory system, I will actually debit the purchaser's account, which is an expense account, so your owner's equity will be reduced. Then if I sell the inventory under the perpetual inventory system, you've got two double entries, one for your sales revenue and one for the cost of sales, whereas under the periodic, you only have this sales transaction. Then any additional cost under the perpetual inventory system, you would take it to the trading inventory account, whereas under the periodic inventory system, you will take it to each and every separate expense account. So we do not have a cost of sales at that point of time. We only have the specific expense account. Then your trading inventory account, under the perpetual inventory system, it is a rolling balance. So we work out the balance every time we add a transaction on there. So you do not have to go work it out again. The balance is normally up to date. Whereas under the periodic inventory system, it remains untouched until we get to year end. We do the stock take and then we only update it and work out the cost of sales at that same time as well. Okay, and that is where we get to cost of sales. Cost of sales for the perpetual inventory system, we record it when we do the physical sale. So that's what point of sale means. Whereas under the periodic one, we record it at year end when the stock take is done. Okay, this is just a recap again. How do you work out the cost of sales on the periodic inventory system? You start with your opening trading inventory. You add your purchases, then you deduct any purchase returns. You add any carriage, railage, freight on purchases. You add any import charges, any custom duties, and you deduct any closing inventory. Okay, now what is very important, when we have the periodic inventory system, there is no cost of sales column, but under the perpetual one there is when you look at the journals. Okay, so for your debtors journals, your debtors allowance journals and your cash book receipt, you will have a cash cost of sales column under the perpetual. Under the periodic, there's no column for those. And then for the general ledger ones, the statement of financial position. So your inventory, there will be a trading inventory account under both of these systems. Where the difference comes in is under your nominal accounts. Under your nominal accounts, under the perpetual, you only have a cost of sales, whereas under the periodic, you will have your purchases, you'll have carriage on purchases, custom duties, import tariffs, purchase returns would be the accounts. And that's also how you will know the difference between what type of inventory system you are busy with. Okay, any questions on learning unit 6?
It sounds like a more theory-based unit.
Okay, learning unit 6 is just explaining the difference between the two inventory systems. You've already learned all the other principles, the accounting principles in learning units 2 to 5. So that is just splitting up what is the difference between the two main systems. So it is just understanding the difference between the two, not necessarily any new concepts. Okay. Then learning unit 7, this is one where it's an easy learning unit, but a lot of students actually struggle with it and get it wrong. Make sure you know the difference between a debtor and a creditor. You will know if you know the difference based on how your test went. If I wrote in your test that you are confusing the two, you better make sure you go and study this so that you don't get it wrong. How we record this is exactly the same. It's just the mirror image of the other one. So where we would, for debtors, work on the debit side to increase it. If we're working over the creditor, we would work on the credit side. The documents are very similar. So learning unit 3, the source documents also pulls in here. So that's why you need to know your source documents well in order to do this. So let's quickly look at the highlights. Okay, so debtors is people or businesses who owes our business money because we sold stuff to them. Why do we actually have a debtors account? Is we need to be able to tell exactly what amount is outstanding at a specific point in time if that debtor asks us, so that they can pay. That debtors account is basically accounting for all the entries in your journals, but in a statement summarized per debtor. So it shows all the month's transactions. So you start with the opening balance, and then it will show all the month's transactions, each transaction individually. Okay. Then you take all of that information to work out the rolling balance, to work out how much is outstanding by that person. So let's quickly look at what does the format look like so that it makes more sense. Okay, so at the top, you've got your debtors ledger, the name of the company. Then you've got your debtors name and the account number. So the first column is the date column. That is the date that the transaction happened. When you capture this information, it needs to be in date order. So as it happened, you do not just enter the information as you read it. You need to make sure that it is in date order. Otherwise, your closing balance will be incorrect. The code column is the coding system. In the exam, they don't necessarily give you the coding system, so you would leave that column blank and open. Then the document number refers to the document and the number as per the information. So normally the information will tell you invoice INV 47, or it will tell you debit note. So you physically just record the document that you're referring to with the number in there. Then the folio is what journal did we take this information from? If they give you the journals, it is the number at the top of the journal. If they do not give you the journal, so they give you a written sentence, then we are testing to see if you understand whether it's a cash journal or a credit journal that is applicable here, or the general journal.
The numbering, like I said, an example, like where does it come from? I know DJ.
Okay, so in the exam, the numbering, so if they want you to use number 8, they will tell you that that month is the 8th month. But normally in the exam, they will just expect you to write DJ, CBR, GJ. So we don't expect you to put a number next to it. We just want to see the actual journal if you know which one is applicable.
But if not, it's the month. Or is it?
It's the month. So the month has a number. But they will normally tell you what the number is if it is not like January as the 1st, 2nd, and that. Then you need to be careful whether you are busy with a debtor or a creditor, whether it's a debit. Now, if it's a debtor, on the debit side, you will increase the balance. On the credit side, you would decrease it. Now, your balance at the end is what you owe. Now, how you calculate it is you take the balance on the previous line and then you add any debits and you subtract any credits to get to the balance on that line item you're busy with. Okay, so let me just repeat it. To work out the balance on the line you are busy with, you take the balance on the previous line, you add a debit amount, and you subtract a credit amount to get to the balance amount in the line you are busy with. Now, the reason you need to do that is sometimes they will tell you that the debtor made a full and final settlement, and if you don't know how to work out the balance, you won't know what amount that they pay. Okay. Or they will tell you they made a full and final settlement, they paid 115,000, but then there would be a portion left over, which was a settlement discount. Now, if you've got the incorrect balance, that settlement discount that you had to work out would be incorrect. Okay. Again, just remember that there should be nothing under the debit and credit column for your balance brought forward or your balance brought down, because that is just the opening balance. It is not a physical transaction. Do you have a question?
Can you repeat the balance thing again?
Okay, so for the balance,
Yes.
there should not be any amount in the debit or credit column for an opening balance, because it's an opening balance and not a transaction. Okay.
Or before that, ma'am, how to get the balance?
How to get to the balance. Okay, so let's repeat how to get to the balance. You take the previous line item, that balance, you add the debit amount in the line you're busy with, you subtract any credit amounts, and then you get to your balance for that one.
Thank you, ma'am.
For your creditors account, same as the debtors. The only thing is this is someone that we owe money to. So our business owes money to another party because we purchased or bought from them. So read carefully, are you busy buying goods from the person or are you selling goods from the person? Because that's what they also sometimes do, is instead of telling you it's a debtor or a creditor, they tell you buy and sell and they confuse you guys. Okay. And we also need to keep accounts for them to make sure that the balance we have in our books is equivalent to what their statements say that they send us, and that you will do in the second semester, the reconciliations. The layout looks exactly the same as your debtors control, except that the information will just be on the credit side, it will increase, for your creditors, and on the debit side it will decrease. But you can see the format is exactly the same, and that's why students confuse the two. So for this learning unit, to master it, the main key thing is you need to know the difference between a debtor and a creditor, and you need to be able to identify based on the information they give you, whether it's a debtor or a creditor. Okay. In the workshop that I did, we did one with a debtor and a creditor's information on one question. So please go revise that. That will show you, give you a good indication if you can identify the difference between the two. You can also go look at past papers for examples of how they asked this. Okay, any questions on debtors and creditors? Okay, then learning unit 8 is salaries and wages. Make sure that you know this. Make sure that you can do the salaries as well as the wages one, because they will ask you this. It will just depend on what format. So they can either ask you to complete the entire journal, or they can ask you to fill in the missing information, similar to what we did yesterday in class. Or alternatively, they can ask you to do the general ledger account. So they give you a completed journal and then ask you to do the general ledger account for those. So that is the three ways they could potentially ask it in the exam. Okay, so make sure that you know what gross earnings is. Your gross earnings are basically your cost to company. It's everything that the employee receives. So it's your basic salary, any fringe benefits, any overtime, any bonuses. Now, how do we calculate it again? We start with the basic salary. We add overtime, we add bonuses, we add fringe benefits. Fringe benefits are those items that you receive because of the fact that you are employed by that company. It does not necessarily, you don't receive it in cash, you receive it in a type of asset that you can use. For example, a motor vehicle, a cell phone, a laptop, that would be a fringe benefit. That is your gross salary that you then put into your salary journal under the gross, your receipts or remuneration section, and then you work out your gross salary or wage. Now to work out your basic salary or wage, you take the hours you've worked times the rate per hour, or overtime is the hours in excess of the normal hours that you have to work, multiplied with the overtime rate, gives you the overtime, and the fringe benefits, they will tell you the value. Then you've got two types of deductions. You've got statutory and voluntary deductions. Your statutory is your UIF, which is 1% is contributed by your employer, 1% is contributed by the employee. Your SDL, 1% is contributed by the employer on top of your normal salary to SARS. Then your pay as you earn is a specific amount that is deducted from your employee's salary. Now that you don't need to calculate, they will give you the values. What is very important is for the UIF and the SDL, make sure to read, do they give you the SDL, the UIF remuneration, or did they give you the deduction? If they give you the deduction, that is what you fill into your salary journal or wage journal. If they give you the remuneration, you still have to go apply the 1% to get to the deduction value. So let me repeat that. Read very carefully if they give you the SCL or the UIF deduction or the remuneration. If they give you the deduction, that is what you fill into the salary or the wage journal as is. If they give you the remuneration amount, you still have to apply the 1% to get to the deduction value. Okay, and your voluntary deductions is like your pension fund, your retirement annuity fund, your medical aid fund. They can talk about a social fund, or like the one we did yesterday was a bereavement fund. Those are voluntary deductions sometimes. Okay, then make sure that you know these important concepts. This will just help you complete the salaries journal better. if you know what a gross salary is and net salary, deductions and fringe benefits. So just know the definitions. You don't need to know it off by heart, just understand the concepts. Okay, we've discussed this. Okay, where they tell you that an employer also contributes to your pension fund or your medical aid fund, go read at what percentage they contribute. So it's either rand for rand, it can be double, it can be 1.5 times, it can be half the amount. Go read what information they say. So whatever you capture under the pension fund deduction column or the medical aid deduction column for the employee, you multiply that percentage then to work out the amount that the employer will contribute towards your medical aid or your pension fund. But that will be additional information in the question itself. Okay, this we've actually sort of discussed. If they ask you for general journals for your accounting and salaries and wages, how you would do it, you would first debit your gross salaries. So that is the total cost to company for the employee, which is an expense. Then we credit any deductions, so our creditors. So that is anything that you had to deduct. The pay as you earn, the UIF that goes to SARS, EMP 201 control account. You've got your pension fund, you've got your medical aid fund. Those are your creditors. And then you credit creditors for net salary. Do you have a question?
Yeah, man, the EMP 201 fund.
Okay, so the EMP, the question is, what is the EMP 201 control account? The EMP 201 control account, that is a creditors account where we capture any payments to SARS. Now, the reason we call it an EMP 201 is because that's the form that we fill in to capture that information when we submit it at the end of the month. And that's why we use that account name as well, because both your UIF, your SDL, and your pay as you earn is captured to it. So instead of having a UIF, a pay as you earn, and an SDL account, we just create one creditor for all the tax amounts that needs to be paid over. Okay. Okay. Now, how do I check that my journal actually balances? The deductions plus the net salary, these two, if you add them together, should equal to your gross salaries. Then you have applied your double accounting entry system correctly. Okay, for the employer, how do we capture that information if they ask you the general journals? You would debit the contributions, so that is your STL and your UIF contributions and pension fund contributions. So whatever they pay in addition to your normal salary, you create an expense account for that contribution, and then you credit who they are going to pay. So who will the person be that is being paid? So it's your medical aid or your pension fund company, and then the EMP 201 as explained. And then once you do the payment, your payment will be, we debit all the creditor accounts and we credit the bank account with the amount that is paid over to them. Okay, and that is how you would do the general journals for your accounting for your salaries and wages. Okay, any questions on salaries and wages? Okay, then the last learning unit is year-end procedures. This is where we're closing off the books at the end. There are 8 steps in your textbook. I'm going to do the main 4 ones, which you can then break down further down into the 8. So the first one is determining your gross profit. So there are 4 steps to determine your gross profit. The first step you have is you take the sales returns and you close it off to your sales account. Then once you've closed it off to the sales account, that sales account gets closed off to your trading account. Then we close off the cost of sales to the trading account. Now, the net sales less the cost of sales, we are working out the gross profit in that trading account. That gross profit amount gets transferred to our profit and loss account, which is where we will go calculate the net profit. Then to work out the net profit, we take the gross profit that we've transferred from your trading account to your profit and loss account. Then we transfer all your income accounts to your profit and loss account. We transfer all of your expense accounts to your profit and loss account. And then we work out the net profit, which we then transfer to the capital account to work out the owner's equity at the end of the year. But that account name is capital and not net profit, it's capital. Then we transfer the profit and loss that we've calculated to the capital account of the owner. If it's a loss, it would be debited to capital. If it's a profit, it's credited to capital. Okay, so depending on whether you made a profit and loss. And then the last step is we close off the drawings that we made during the year also to the capital account, to work out what is the new capital position of that owner at year end. Okay, and that's it. Do you guys have any questions on Learning Unit 9? Okay, do you have any questions on anything from Learning Unit 1 to 9? Is there anything questions that you brought that you're still wondering about? Okay, so I'm just going to give you a few minutes just to think of your questions that you have. I know this is a lot of information, so you see there's a lot that you have to study. So what I would suggest for the exam, start with Learning Unit 7, 8 and 9, the new stuff first, because you have not done that a lot. If you can do those 3 Learning Unit 12, that is where you can score a lot of marks. That's where you boost your marks. Then go back to Learning Unit 2, do accounting equations, but do the one with the VAT as well. Go back to Learning Unit 3 for VAT, and then 4 and 5 you study together with 6. Those 3 you study together and you just practice questions. There's a lot of revision questions on the back of your textbook. Go work through those. Those are additional questions as well. But how you need to practice is you need to sit and physically write out these questions. For the revision questions, they tell you what the mark allocation is, so you can also go practice the timing. So what you do is if it's 25 marks, within 25 minutes, you should have finished that. And then you go mark it and see where you went wrong and what you still have to go revise again. Or what did you not understand? Did you find your question?
No, it's fine. Yes, there was regarding irrecoverable data.